Hey everybody. I made a video recently that got a little bit of some pushback. And it was talking about investing, and it was talking about the risks that we do or that we have when we invest.
Yeah.
And so I kind of want to dive into that a little bit more today. One of the things that I said in the video was we need to know our risk. What are we wanting out of our investment? And what are we willing to handle? And one of the areas that I said was risky was the stock market. And I said that because the stock market does go up and down.
Absolutely.
And if you put some money in, let's just keep numbers simple here. If I put $100 in, the stock market goes down, I don't know, 10%, I lost money.
Yeah, you lost $10.
I lost $10. And so now the stock market, if it goes up 10%, how much do I have now?
Yeah, you have $99.
I have $99, which is actually less than my $100 to start with.
That's true.
So I need the stock market to go up more in order to even break even. So that's what I was kind of thinking in my mind when I was talking about the risk involved with the stock market. It goes down, and then you need it to go back up plus a little bit more in order to get your money or continue to make money.
Absolutely.
Ryan, what thoughts do you have about risks with the stock market?
I agree. If you're only going to invest for a year or two and you need that money, that's
Yeah.
risky. So if I put in $1,000 and I'm going to use that for a vacation in 1 year in the stock market, I better be prepared to lose 20 to 30%, maybe more in the worst case scenario. So to me, it's more gambling if you need it for the short terms. If you put in $1,000 in the stock market for 20 years, though, based on historical returns in the S&P 500, you are never going to be down, based on the history so far. So if you're not investing for the long term, there's potentially big risk.
Okay. The other area that I want to move into was an area that not everybody can get into, but it's real estate. You know, you need a little bit more money in order to buy a property and make it work. You need some extra money to the side in case things go wrong. And for me, I've had to do some evictions with my real estate.
Just recently, right?
Even just recently, yeah. And that's costly. It cost me money to evict somebody from the house.
Why does it cost money to say goodbye to somebody then? and if you don't mind me asking, why were they evicted?
So because they didn't pay.
Okay.
So if somebody's not paying, they gotta go.
That was going to be my guess, but there's other reasons they potentially could have got evicted.
Yeah.
Like if they're too rowdy or loud or breaking.
If they're breaking the property,
breaking the property.
If they're allowed, I'll have a conversation with them. But if they're breaking stuff or not paying, then we got some issues.
So you evicted some.
So it does, because we're going to the courts.
Oh. Okay.
We have to pay for filing at the courts. We have to pay for the sheriff to go out. We have to pay for the turnover to like repaint the house or put in new flooring, new carpet. So there's a cost affiliated with that risk of having a tenant who does some damage to the property.
Okay.
So that's the risk associated with real estate. Not to mention the 2008 when everything came crashing down, but that's a whole different side note there.
Right.
The third area that I talked about was just holding on to cash. And I mentioned putting it under your mattress. Maybe you don't put it in your mattress, but maybe you put it in a local bank's credit union making 0.05% interest. What do you think? Is that a good place to hoard money?
No, I wouldn't put too much in savings personally. It's nice to have some savings for emergencies. Like some people say, have 3 to 6 months worth of emergency savings.
Mm-hmm.
But if you have too much in savings, you're not investing it in the stock market, so it's not going to grow, or you're not using it in real estate to grow it that way by maybe having rental properties and things like that.
Yeah.
So then it's just kind of wasting.
Right.
Inflation historically is at 2%. So
that's what we're hoping.
Yeah, that's what we're hoping. To your point of like getting 0.05 in a savings account, you're losing money in a sense, or buying power every year.
Yeah. Yeah, and that's the risk that I was referring to or trying to talk about. Just putting it under your mattress. You're not making too much money under your mattress.
No.
You're not making too much money by even keeping it in a 0.05% interest savings account. So I do think having the emergency fund is great. I think having some available cash in that savings account at your local credit union is good. I think that's a fantastic thing. But just like you said, if it gets to be too much, maybe you're trying to go on that trip in a year or two, maybe 3, put it into a high yield savings account where they're getting 4.5%, 5% as of the time of making this video.
Yeah. No, I checked today, and a local bank actually, it's 4% for 1 year. If you just put it in the bank's 1 year kind of savings, you can get 4% for just that 1 year. So we're in a really good place right now for high yield savings accounts.
Yeah. So that's where I would put the money. If I know I don't need it, maybe I need a mattress or a car, right? I can put that money. It's close. It's local, right? I don't have to go into an investment and have to pay the capital gains tax and all that fun stuff.
Exactly.
But it's there. So those are the risks that I feel are associated with the stock market and real estate and just holding onto some of the cash. Are there anything else that you can think of that I may have missed?
No, I think there is too much risk people might take. I'll give maybe another example. If you really believe in one company, whatever company that might be,
Tesla to the moon.
Tesla, and every paycheck you're putting $200 into Tesla. Tesla's gonna go to the moon.
Yep.
To me, for most people, I believe that's just too much risk. Even though it's a wonderful company right now and doing well, you just don't know what the future has. So you want to be diversified and kind of hedge your bets and maybe have 10 companies you invest in or a mutual fund. So, but we were talking earlier off camera about risk tolerance too.
Mm-hmm. Yep.
Some of us have more risk tolerance than others. So I call it the sleeping good at night test. If you're sleeping good at night, not thinking about your money and what it's invested in, what it's doing, then you're probably in a good place.
Yeah. I think that's important. You need to know as an investor, as a person that's your money,
right?
What are you okay with? Are you okay putting it into Tesla and Tesla has these swings?
Right.
And are you okay with that 20% down, 20% up, 20%, it's just one of those, that's the risk. Are you okay putting it in the real estate and the risk that's associated there? So you need to know your risk and go from there.
Absolutely.
Great.
But by not doing something with your money, that like we were talking about earlier, you're just falling behind potentially.
Yep.
And we got to keep moving forward.
Yeah.
In life,
so you need to do something with your money. Don't just put it in the savings account. Find something that's actually making some money.
Exactly.
Whether it's investing in stocks, real estate, high yield savings account for the short term.
Absolutely.
So I hope this helps. If there's other questions, leave them in the comments below so we know what to make a video on. And that's about it.
Yeah, that's great.
We'll see you next time, everybody.
Thanks.